Hey guys, Joel Frank here, market analyst for YouTrading. And in today's video, we're going to be taking a quick look at a trade idea that I'm currently monitoring. It is to do with the S&P 500. I've got a CFD that tracks the S&P 500 futures price here. And you can see that, as I predicted earlier this week, after we had this breakout below this upwards trend line and the 21-day moving average, we did have a dip back to 4,000. We did test the 50-day moving average, and we're now finding support. So we can get rid of that line. Now, I'm thinking there's a good chance now that actually, because we've just found really good support at this upwards trend line, which has been in play since the bottom in last October, pretty much to sum up what I'm thinking there could be a grind back higher towards the 21-day moving average, around 4,100, and potentially even back above. And the crux of that view, fundamentally speaking, is because global liquidity conditions are improving, despite the recent hawkish repricing in Fed expectations. There has been a draining of cash from the US government's cash account, which has basically injected liquidity into US financial markets. And we're seeing these big liquidity injections in Asia as well, which, you know, they also have an impact on global markets too. So that could potentially cushion things, because you've got to give credit where credit's due. This equity market has been very resilient to the hawkish repricing in Fed tightening expectations that we've seen since the start of the month. Like if we just go on the monthly candlestick, you can see the S&P 500 is only down 1.4%. But if I just show you the CME Fed Watch tool, and we can look at how big the shift in Fed tightening expectations has been. Let's see if we can get this to load. Here it is. So maybe if I go to May, that's more interesting. So, you know, a month ago, we were still expecting that there'd be one final rate hike in March, taking interest rates to 4.75 to 4.5% from the current rate, which is 4.5 to 4.75%. But all of a sudden, we're now expecting an interest rate hike in May as well. You can see that 1 month ago, there was only a 36% chance, according to money market implied probability. It's now seen as pretty much certain. Like there's only a 0.1% chance that interest rates won't have risen above 5% by then. We're also expecting another one in June. The base case is for interest rates to be lifted to 4.25 to 5.5%. And, you know, markets are even pricing an outside chance of another rate hike to 5.5 to 5.75% in July. You know, look at this. It's like a 30% chance here that markets are pricing that we could be, you know, above 5.5% by the start of H2 2023. And if you look to 1 month ago, that was a 0% chance. So anyway, that pretty much sums up what we've seen, the hawkish shift in Fed tightening expectations because of the hot data, because of the hawkish Fed speak. Obviously, we had the FOMC minutes last night, which kind of reiterated a lot of those themes. And yeah, it's impressive how resilient this market's been. Technically speaking, I think still things are looking good in the medium term because obviously we have this downtrend from 2022, and you know this bullish breakout. That's a big medium-term shift in momentum. Same with the break above the 200-day moving average. So yeah, in the short term, I'm thinking there is the potential for a crawl higher, potentially even back to 4,200 over the next couple of weeks, perhaps. Anyway, guys, hope you all enjoyed the video, and I will see you all in the next one.